If you have a company car, or more precisely, if you hold a car and business assets, you can deduct all costs associated with this car from taxes through accounting. But you must essentially determine and tax the private usage share of the car. You can either do this generally with the 1% method, or more accurately, with a mileage log. With a mileage log, you ultimately record more or less all trips individually and then determine which trips are business related and which are private. And this way, for example, that you use your car privately 28% of the time and therefore must also bear 28% of the cost privately. And, of course, in my professional career, having worked in tax consulting for over 10 years, I have seen an incredible number of mileage logs and also an incredible number of mistakes in mileage logs, some of which strange mistakes that quickly suggest that this mileage log has not been maintained properly. You can't imagine how much lifetime I have already wasted with these things here. This is simply the ultimate challenge for many entrepreneurs and self-employed individuals. A mileage log is cheaper than the 1% method, at least in most cases. But maintaining it while sitting in the car, shaking on a soft surface, when it rains, it's wet, and it all has to be legible and remain legible in 10 years. This is where most self-employed individuals simply fail. There is a better solution called the electronic mileage log from Vimcar. This mileage log is maintained. When you move the car, the trips are tracked. Then categorize the trips on your phone or browser, indicating whether it was private, business related, what it was for, and then it's all taken care of. And then you no longer need this thing and are no longer at risk of the tax office rejecting your mileage log, as that happens regularly. But Vimcar has already been tested and accepted in many audits. So click the link in the video description below. And that's why we're going to look at 5 things in this video that I have seen in my professional life regarding mileage logs, which you should pay attention to and avoid these mistakes, because that, well, how should one put it, is an admission that you somehow falsified or manipulated this mileage log afterwards. And the first point is actually almost a classic. Your mileage log must match your calendar. If you have an appointment with a client on May 10th, then it is almost impossible that you on May 11th have that entry in your mileage log. And what also does not exist, and therefore should not be in your mileage log, are things like February 30th, April 31st, June 31st, 31, September. If there are days that do not exist, you also cannot have driven on those dates. Therefore, please make sure to maintain your mileage log in a timely manner so that such mistakes do not happen. What I have honestly seen quite often is the second point, namely simply a water-soluble pen in the mileage log. I know some people like to write with a fountain pen. You can do that if you want, but please not in the mileage log. If you use water-soluble color, such as ink for your mileage log, then the risk is relatively high that I would say at some point in the life cycle of the mileage log, rain will fall on it or a drink will spill. And so on. And then unfortunately, the whole thing is no longer legible. And not legible usually means you have done the work for nothing. You have to apply the 1% method and pay correspondingly more taxes. Ideally, you should use an electronic mileage log anyway, as it is stored in the cloud or in the app. Then you can throw drinks around as you like. The data is safe, and you never run the risk of having to apply the 1% method. A similar mistake, but more self-inflicted, is the third mistake and probably the most common mistake. A mileage log must be legible and, in fact, legible to outsiders. The tax office might review your accounting in 6, 7, or 8 years, and they might then come up with the idea of wanting to examine your mileage log more closely. Then, the auditor sits in front of your mileage log and must be able to understand it. This means, fundamentally, accounting and thus also a mileage log must be prepared in such a way that a third-party expert can get an overview within a reasonable time. And this also applies to the mileage log. And I know that this is not so easy with paper mileage logs. You write them on your knee, arm, back, or steering wheel. That is not always the most comfortable writing position. But if your entries cannot be read, meaning outsiders cannot read your entries, then you might as well save yourself the effort. By the way, that would also be an argument for an electronic mileage log. or for nice handwriting. And another mistake, which is not directly related to the mileage log, is my fourth mistake. And I would say it's almost my favorite mistake. Namely, if you have a gasoline car in your business assets and you maintain a mileage log for this gasoline car, then it is a gasoline car. And then it is also a gasoline car at the gas station. I have encountered this often where there is a gasoline car in the business assets and diesel is constantly being refueled. That is then obviously a fuel receipt that does not belong to the car. Conversely, the same applies. And if you have an electric vehicle, then you also don't go refueling. Then you can't submit any fuel receipts either. There is a way to account for trips with a private car in the bookkeeping. However, you cannot do this by simply submitting the fuel receipt. How you can do this, made a video, linked in the upper right corner. That's beyond this scope. It is important to note that just because you are self-employed and do bookkeeping and can generally deduct fuel receipts, it does not mean that you are allowed to collect all fuel receipts from your entire family and friend circle to include them in your bookkeeping. That is not possible. A small note, there is also an address on a fuel receipt, like the address of the gas station. And if you were not even near that gas station according to the logbook, then you could not have refueled there. This means that either the fuel receipt is incorrect or your logbook is incorrect, and you actually want to avoid both. So you want to prevent the auditor from getting that impression. And with that, we come to the fifth point, namely the original documents. When you keep it on paper, then you can scan it later. You can also transfer it to Excel if you want. The original documentation is then the little paper booklet in which you first recorded your trips, such as your vacations or business travels. And you actually have to keep this little paper booklet, for example, for future reference. You have to archive the whole thing for 10 years. Just because you copy something, it doesn't mean you can throw away the original document. That is, the physical logbook. If you want to work digitally, then you should also keep a digital electronic logbook from the start. Vimcar is my recommendation. Find the link in the description. It is very important that you don't throw it away. There are indeed recurring court rulings on this. And the courts then say that these mileage logs cannot be recognized. This means that the 1% method will also be applied. And now here comes another funny story about archiving, because I had this discussion recently in the comment section under one of my videos. It was said that the cloud is so insecure. So if I take the Vimcar mileage log, the data is stored in the cloud. Isn't that dangerous? Yes, technically, theoretically, data can always be lost somehow. But in my experience, data in a professional cloud is significantly safer than somewhere in a box in your basement. The funniest and at the same time, the saddest story was once a client who called me, he had a business audit. And he was actually supposed to submit accounting documents, including his mileage log, to the auditor. The problem was that the audit referred to a year when this client was married to his ex-wife, and they lived together in a house where she now lives alone. Unfortunately, they did not part on good terms. And now the whole situation was such that his accounting documents were indeed securely archived, but they were archived so securely that his ex-wife no longer allowed him into the house. This means he actually had a huge disadvantage in his audit because his ex-wife did not allow him to enter the house to access his accounting documents. And the situation was such that in the end we had to tell the auditor that we no longer had these documents and records. They were there, but we just couldn't access them. Therefore, it is important to please archive your documents there, and also in such a way that you theoretically still have access to it in 10 years. And if you do everything online, you book a service such as a cloud service for accounting, then they take care of it and you pay them. In my personal experience, the data in the cloud is safer than in your basement. I hope this video was helpful to you and that you will no longer make the most entertaining mistakes regarding the mileage log. If you have any questions about this, feel free to leave us a comment under this video. I thank Vimcar for sponsoring this video. If you are looking for an electronic mileage log, then click the first link in the video description below or right here. And now you could maintain a mileage log or simply watch another video on this channel. For example, this one or this one.